All right, let's talk about the single biggest story in the market right now, artificial intelligence. You've seen it everywhere. There is a massive wave of excitement, a tidal wave of capital flooding in. But how do you, as an investor, separate what's real from what's just speculative hype? Well, in this explainer, we're going to give you a framework to do just that, to look past the obvious stuff and find the hidden value in the whole AI revolution. Okay, so here's our game plan. We're going to start by unpacking what I call the AI investment paradox, this huge conflict that's facing every investor. Then we're going to build out your fundamental analysis toolkit so you can think more like a seasoned investor and less like a gambler. After that, we are going to bust a huge myth about AI, this idea that it's all just digital. We'll show you the physical reality, a business of atoms. And finally, we'll connect the dots and show you how to use that reality to find some really interesting opportunities by investing in the picks and shovels of this new AI gold rush. So let's just dive right into this core conflict. On one hand, you have a market that is pouring literally trillions of dollars into what looks like the next industrial revolution. I mean, the excitement is off the charts. But on the other hand, there's this very real risk that the hype is just getting way ahead of the reality, and a lot of these investments, they could go to zero. This is the AI investment paradox. And just to give you a sense of the scale here, look at this number. We're talking about an estimated $2 trillion, with a T, in annual spending on AI. This isn't just a few startups anymore. We're talking about the world's largest corporations re-architecting their entire businesses around this tech. It's a gold rush, for sure, and when you see a number that big, it makes you feel like you just can't lose. But, and this is the crucial but, here's the other side of that coin. Vanguard, one of the biggest investment managers on the planet, puts the probability at 25 to 30% that AI completely fails to deliver the economic boom that's already priced into these stocks. Think about that. A nearly 1 in 3 chance that these sky-high valuations are built on, well, a foundation of sand. That gap between the hype and the potential reality, that's where investors get into some serious trouble. So how in the world do you navigate this without getting burned? Well, you have to stop speculating and you have to start investing. And to do that, you need the right tools in your toolkit. So let's build it. Okay, the first and most important principle, and this comes from legends like Warren Buffett, is knowing the difference between price and value. Price is that number flickering on your screen, right? It's driven by fear, greed, hype, news headlines. Value? Value is different. That's the real intrinsic worth of the business itself, what it earns, what it owns, its real potential. You see, speculators chase price, investors analyze value. Getting this right is the bedrock for everything else we're going to talk about. So how do you get a quick read on a company's health? Well, let's add a few metrics to the toolkit. First up, the PIG ratio. If it's under 1, that's a good sign. It means the price might actually be justified by its earnings growth. Then there's EV to EBITDA. This gives you a sense of the company's total value compared to its cash earnings. Generally, a number under 10 suggests you might be looking at a bargain. And you know, in a wild sector like AI, focusing on large or mega-cap companies can add a nice layer of stability. Now, these aren't magic bullets, but they're absolutely your first line of defense against overpaying for hype. I love this quote from IBM's founder because it perfectly sums up this idea of a circle of competence. It's a really simple but powerful idea. Only invest in what you truly understand. So for AI, ask yourself, can you explain how a company makes money from a training model versus an inference model? Do you get why something like HBM memory is a critical bottleneck right now? If the answer is no, you might be accidentally speculating on tech instead of investing in a business. The goal isn't to become an engineer, it's just to be honest about the boundaries of what you actually know. Okay, so to really expand our circle of competence in AI, we have to tackle a massive myth. It's a huge misunderstanding that honestly causes a lot of investors to look in completely the wrong places. You know, when most people think about AI, they picture something ethereal. They think about lines of code, chatbots, these giant language models just kind of floating around in the cloud. They see it as a business of bits, totally intangible, weightless, and infinitely scalable. And look, while that's part of the story, it is a dangerously incomplete picture. Because the reality is, artificial intelligence is fundamentally a business of atoms. It has a massive, heavy, power-hungry physical footprint that is absolutely non-negotiable for it to even work. And this is where the real bottlenecks, and some of the best opportunities, are often hiding in plain sight. I mean, just look at this contrast right here. It tells the whole story. For every fancy algorithm, there is a physical data center that has to be built. For every model running in the cloud, you need gigawatt-scale power grids to run it and incredible amounts of water to cool it. Seriously, the biggest constraints in AI right now aren't just a shortage of software engineers, it's things like advanced chip packaging, high-bandwidth memory, and literally just finding enough electricity to power these data centers. AI runs on a real, tangible, physical foundation. And this physical reality gives us an amazing framework for investing. The AI boom is a modern-day gold rush. Everyone is stampeding to find the gold, the next breakthrough AI model. But if you look at history, the most reliable fortunes in a gold rush weren't made by the prospectors. Most of them went bust. The real money was made by the people selling the picks, the shovels, the wheelbarrows, and all the other essential gear. So, let's do it. Let's take this picks and shovels strategy and apply it directly to the AI industry. How do you actually find the companies that are providing the essential hardware and infrastructure that makes this whole revolution even possible? Here's a simple 4-step playbook. First, you've got to look beyond the really obvious plays, like the big GPU makers. Everybody already knows about them. Second, identify the real physical bottlenecks. What's actually in short supply? We just talked about it. Power, cooling, advanced packaging, networking gear. Third, follow the infrastructure. Where are those trillions of dollars in capital actually being spent? And finally, step 4, target the companies that are solving these exact problems, the picks and shovels players. Now, this slide basically gives you a map of where to start looking. And just to be clear, these are examples for your research, not recommendations. But they show you the kind of companies that fit this strategy. You've got firms that specialize in thermal management. That's the cooling systems for these incredibly hot data centers. You have networking companies that let all these computers talk to each other at lightning speed. You even have engineering firms that physically build and wire these complex facilities. And hey, for those of you who prefer a more diversified approach, you can even look at ETFs that focus on power infrastructure or the broader tech ecosystem. So, we'll end with this question for you to think about. The AI revolution is really just getting started, and you can be sure there are going to be other tech waves after it. By shifting your perspective away from the purely digital and towards the physical reality, from the bits to the atoms, you get a much more powerful way to analyze what's going on. It lets you look past the headlines and focus on the essential, foundational businesses that make it all happen. So, the choice is yours. Are you going to chase the gold, or are you going to sell the picks and shovels?